Hello everybody, it's me the Boss Hog, and today we're going to look at my stock portfolio as of the week ending the 4th of February, what I've been buying, what I've been selling, and the dividends I've been getting. Let's do it. Alright, so sorry this is a little bit later than I'd like to do it on the weekend. I've actually not been very well for the last few days. Blame my daughter. She moved up in class in nursery, and she's brought some new germs back with her, so that's been fun. So if I cough or anything else, that's why. I am on the tail end of it, but that's also why my month-end videos are a bit slow as well. We'll get round to those, but in the meantime, let's have a look at this week specifically. So, honestly, it was another pretty crazy week. It might not look like it because, like the week finished plus £460, so that's about 0.3% up. But during the week, I had my second best day and my worst day in the same week, which is pretty mental. The only day that was better was much better, and that was when my then largest holding, Huntsman Corporation, had an activist investor take a stake, which caused that to rocket. That's the only day that I've had, which was about double this one. You can see here, I mean, these are week changes, but there were quite a lot of stocks that, really went up very high for the first couple of days and it went down. So, they finished, just fractionally different. The shares, I ranked these roughly in order in terms of their impact. Obviously, Amazon and Google both had great earnings. Hollywood Bowls had, in my opinion, a bit of an overdone pullback. It really shot up, but actually has come down. I'm considering buying more of this share, having sold off a third of my stake previously. Games Workshop's recovering just a little bit, but had been up a lot more as well. Genius, again, I mean, I added shares last week because I thought they had a really solid investor day, and now I feel quite confident averaging down in this, so we'll be doing so, although I didn't buy any this week. And Goldman Sachs, I think I got a pretty great entry point to Goldman Sachs as of last week, so that feels really good as well. Yeah, I've already touched on that. My capital adds this week was 1.2k, so we got paid, so that's nice. Originally I was only planning to put in £400 this week, and I was even going to do like £200 Monday and then like £200 Friday. In the end I just added another 1,000. I think it was on Thursday, and you'll see why in a second for one of my buys, although if you've read the title you've probably already got there as to why, so that's cool. I would describe this as more normal levels of trading this week. Actually, I sold very few things, and really that was just to take advantage of political wobbles on one of the shares and free up some capital for that, and basically to diversify my financial holdings a little bit. So fairly, low by my standards, especially what we've been seeing for the last couple of weeks. And actually one of the best dividend weeks I've had for months. So that was really good. Bristol Myers there. For this dividend, I had 300 shares in BMY. I currently only have 200, but I'm probably going to leave it at 200. So next quarter, I'll get about £70, something like that. But it still feels really good to be getting that kind of dividend. I'm still quite new to investing, and so getting a three-figure dividend in a quarter definitely feels really good. So that was nice as well. Anyway, without further ado, let's have a look at our buys. All right, so you'll notice here my new position, and the reason why I added £800 more capital this week than I was originally planning to is to buy Facebook. To be honest with you, I sort of grimaced a little bit when I bought this. It's very similar to me. I don't have Chinese shares because I just don't want them. It's not something I want to support. To be honest, I'm not really a big fan of Facebook. I don't use it myself. I don't really like their business, to be honest. But I class myself as a value investor, and after the fall, they're trading in the mid to high teens in terms of PE. And I get the reason for the fall, and I get the risk. I read up quite a lot on Facebook before I opened this position. I was basically reading. I was up as the results came in, so I spent that evening reading up. And I get it, right? The risks are still there, but now I feel like all of the risks have basically been factored in. It's now trading on a PE below the S&P 500. It's way below its technology peers. Okay, it's no Microsoft or Apple, don't get me wrong, or Google indeed. But to me, it was just a good opportunity and a good entry point for a value share that, okay, yeah, it still has some risk, it needs to kind of recover. Its advertising arm has definitely taken a hit for various reasons, and it's having to spend to kind of reinvent itself, right, as this metaverse company. So it's got costs without having a way to monetize it yet. But I just felt like that actually the company is still making good money. And, if it is able to make a success in Metaverse, it feels like a really great entry point. I feel like none of the upside potential has been factored in. And maybe that's because, people aren't sure yet how that's going to be realized. And I get that as well. So for me, I'm never going to have a huge position in this company. I imagine I'll never have more than about 10 shares in it. And I will be looking to buy some more shares, probably under about 220. And certainly, it approaches 200. I just think it's a good value play, really, more than anything else. So that's why I'm in it. And yeah, this to me is like a medium-term trade. Medium-term trade is the plan here. So, once I get sort of 20-25%, I'll reassess and go from there. Next up here is T Rowe. I decided to diversify what I like to call my Yank banks, and basically trim some other shares to free up some money for this. Basically, I saw a YouTube video, and it was looking at long-term trends of this company in terms of their dividend yield and their price to book and etc. And I just felt like it was a good way to diversify. I've spoken before about the fact I think the US has better banks and the UK has better insurers from an investment perspective. And this was just more of the same, really. So I decided to open a position in T Rowe. I am down about 2% on this at the moment, but that's okay. And basically, I took a few percent profit elsewhere, so it didn't feel too bad. And yeah, this one I will be adding to, I think, in the medium term. So, this to me, I've got JP Morgan, Goldman Sachs. I'd like to get back into Huntington Bank shares as well. I've traded them before very nicely, but they're a little bit expensive at the moment considering they didn't have great results recently. But this was a good chance for me to have basically this, a bit of an investment back end play to help with that US financial diversification that I'm aiming for. Next up is Amcor. So this really is ticking a lot of boxes for me. I've spoken about it a little bit before, but basically it's a semiconductor testing company. It's got favorable geopolitics and kind of direction of travel in the kind of medium term from a strategic directive. Also as well, it's kind of to me like reached that inflection point that a business goes through where, like they have to scale to get to that point. So, they're not making much money, but their last financials, the last 12 months have really shown an uptick. And I'm optimistic that that's going to continue for the future. I've actually got about 3% of my portfolio in Amcor now, so it's definitely become a more material holding for me. And I continue to buy it basically. I'm continuing to average down. So at the moment, I think my average is 23.11, and I picked up these shares just under $21, something like 20.80, something like that. And again, this feels really good for me. So I like the direction of the company. I think it's being overlooked a little bit at the moment. And like again, if you look at the PE of this company in that space, it's dirt cheap. So I think it's being kind of like pulled down for no reason, compared to the rest of the semi sector when it's already trading at a relative discount. So again, I continue to buy shares in this company. Amazon, I bought before the results, which is a bit of a shame because obviously they had good results. Saying that, when you look into the details of Amazon's results, there are definitely some pros and cons to it. Their advertising revenue was the bit that surprised me most. Obviously, their cloud stuff didn't surprise me because that's a very strong part of their business, and their retail arm was pretty dreadful. So I wasn't really quite sure how the market was going to take it. I put in 200 before the results, and then just added a little bit, I think, from some rounding or something else. But yeah, I wish I'd put the full 400 in, but I just did 200 into Amazon, and then the other 200 got split up between a few companies. I think it was between S4 and Games Workshop there. But that's fine. Yeah, continue to buy there. And Everaz, I just wanted to kind of spend just 30 seconds on this because it's a company I've championed before, so I feel like I should give a little bit more explanation. I think Everaz under £5 is a bit of a bargain. It's being punished at the moment because of Ukraine, and the fact it's got 5 oligarchs that may well be in line for any kind of sanctions or anything like that. And the geopolitical situation is not great at the moment between the UK and the NATO more generally, and Russia. Everaz's mines are primarily in Russia, so that's going to have an impact. Certainly all its iron ore stuff. It does have steel and a few other things elsewhere, like steel in America, for example, but it's being dragged down from that. And also, I believe, although I can't prove this, but it's basically divesting its coal arm, and it's going to be trading its coal. It's going to be a new company traded on the Moscow Stock Exchange, which is going to mean a lot of people can no longer hold that. So again, I think it's been dragged down a little bit unfairly because of that. I'm just going to take basically the redistribution of the cash when my broker is forced to sell it because it doesn't trade on Moscow. That's okay too. I've spoken beforehand. I think I'm fairly agnostic about that. So for me, it's actually a good chance to just buy Everaz under £5. If you look at the iron ore price, it's now about 140 again. It's had a good bounce from just being under 100. And I've said previously, I wanted to buy this at sort of 575 when it was at $100. So for me, it's just, a very clear buy actually, and that's exactly what I'm doing. I'm trying not to get distracted by kind of the short-term divestiture. Hopefully, it will be a short-term political conflict. Hopefully, it stays political. And then we'll go from there. So I continue to buy Everaz despite the risks around it. Basically, I think there's enough upside here. It did also release a production update, which was moderately ahead of expectations. And although it doesn't have too much in the way of financials in that, I'm actually relatively optimistic on the financials because it will have benefited from the increase in coke and coal prices that have been going. And the fact that iron ore prices are recovering as well. So this is the highest dividend payer in the FTSE 100, and I think at the moment it's got a lot of capital upside as well. So again, for me, it's just a very clear buy, and I was glad I was able to find some money for it. So anyway, let's have a look at what I did have to sell to buy some of these things. All right, so in terms of my sales, I'll start with Kainos. I really like this company actually. It's got great margins, great financials in general. I just decided that it's a little bit expensive. And I wanted to free up some money for a few other things. Most of that did end up going into Everaz, to be fair, but I do like the direction of travel for Kainos, and I'm kind of hoping to pick up more of it. Just at £16, it's on a really hefty multiple. So I just, I basically wanted some money. This was green, so that's quite a rarity in my portfolio at the moment, and decided to take some money. I know it's not always good to sell your winners. I totally get that. But again, I don't have a huge stake in it, and I was like, if I'm gonna have Kainos in the long run, kind of wanted to make a bit more of a play for it, but not at £16 a share. So that was my thinking here. So again, if I can get this close to 15, that would be superb, because I do think it's a really good company going places, but it doesn't really have much in the way of kind of moat or anything like that. It's just a very technologically and I guess human capital smart company that's going. Excuse me. And regarding the rest of it, I decided to trim JPN and Goldman Sachs. Both of these companies I timed the dip almost perfectly from the week before, so I was actually up, high single digits when I sold. I don't have huge exposure at the moment across US financials. Even after these moves, I've only got like 1.6% of my portfolio, something like that. I would like to grow that, however. But I just trimmed both of these. I think I've still got like 4 Goldman Sachs and 7, 8 JP Morgan, but again, wanted to kind of diversify very slightly into that. And I've put, I know here I've been mentioning about Huntington Bank shares, and here you'll see them on my sell. It's literally because I had like 1/10 of a share left, and that was kind of just annoying me in my portfolio. So again, if I get the chance to buy Huntington Bank shares under $15, I will do so. Because again, I think it's got a lot of potential, and it's snugly sitting in the middle of the S&P 500. It didn't have the best results, although I do think again, like it had run up too much and then fell back too much. So, but I have a 1720 target for this. So before the results was up at like 1770. I would have absolutely sold if I had shares in that, because I think that's definitely overdoing it. But if I can get this again under $15. I absolutely will. I've made some good money on Huntington in the past, and I think I know the business quite well. I've been on earnings calls, etc. So again, if the opportunity arises, I will jump back into H-Man. But for now, I just got rid of my tiny little share remaining there. So there we go. Anyway, a much shorter video this week, mainly because my voice hurts, and also because I haven't been particularly active. So that's what I have been doing this week. Any questions, let me know below. Otherwise, I've been the Boss Hog. Thanks very much for watching, and good luck with your investing. Bye for now.